Hey guys, welcome. Hope you're all doing well and staying safe during these difficult times. My name is Addison and this is Finance with Addison. On this channel, I'll be providing you guys with knowledge, tips, and tricks on how to build wealth, save money, and pay off debt. If that's something that sounds interesting to you, please hit that subscribe button below as well as the notification bell. And if you find this video helpful, please hit that like button because it really helps out the channel a lot. For today's video, I want to share with you guys what a Roth IRA is and why I decided to invest in one. I really like the Roth IRA because it's something that can help you today as well as in retirement. So if you're not sure what a Roth IRA is, that's okay. For a long time, I didn't fully understand what a Roth IRA was and how it can help me. I kept hearing about it from friends, coworkers, people online. A lot of people kept telling me, if you think you're going to be paying higher taxes in retirement than you are now, then you should invest in a Roth IRA. You might have also been hearing this from people, and while that can be some good advice, it doesn't fully encompass everything you'll need to know to decide if you should invest in a Roth IRA. So let's get started talking about what a Roth IRA is. The Roth IRA has been around since 1997 and was named after one of the Delaware senators, William Roth. The first important detail to talk about is that the Roth IRA itself is not an investment. Rather, it's a tax-advantaged account that allows you to invest for retirement. So basically, you can think of it as a vehicle that you put your investments into. These investments can be stocks, bonds, mutual funds, and many other investments. The Roth IRA is a lot of times compared to its almost twin brother, the traditional IRA. Where these two accounts differ is that with the traditional IRA, you put in pre-tax dollars now, and then when you pull your money out in retirement, you pay taxes on that money then. Whereas with the Roth IRA, you put in after-tax dollars now, and then when you pull that money out in retirement, you don't pay any taxes at that point. Going back to the vehicle analogy, you can think of the traditional IRA as like a taxi, whereas the Roth IRA is like Uber. You don't pay anything when you get into a taxi. But depending on how far you go and how long you're in the taxi, you pay a certain amount when you get out of the taxi. Whereas with Uber, you order the Uber, you get a quote for how much it's going to cost, and you pay that before you get into the Uber. And then it doesn't matter what happens between point A and point B, you don't pay any more or any less when you get out of the car. Now, I will admit this is an oversimplification for the differences between a Roth IRA and a traditional IRA. I do really want to go over this topic in a future video, but for this video, I'm going to focus on the Roth IRA. Another aspect of the Roth IRA is that there's a maximum you can contribute to the account each year. For 2020, it's $6,000. Unless you're over the age of 50, and then the government allows you to put $7,000 into your Roth IRA. A lot of people don't know this, but you don't actually have to contribute all the money that you want to for the year during that year. You actually have until the following year's tax deadline to make the contributions. So for example, if you wanted to make 2020 contributions, you have until April 15th, 2021 to make those contributions. Another thing to keep in mind is that there are income limits that restrict certain individuals from contributing to a Roth IRA. These amounts change each year and can be found on the IRS website. I'll make sure to put a link in the description below. The last thing, and this is kind of the way the government ensures that you're building towards retirement, you're not allowed to pull out any of the gains from your Roth IRA until you're 59 and a half and the account's been open for 5 years. If you break this rule, you'll have to pay taxes on those gains as well as a 10% penalty. It's just best not to do this. Now, I want to talk about the advantages that led me to start investing in a Roth IRA this year. Like I kind of said before, these advantages are going to help me today as well as in retirement. The first one is the power of the Roth IRA tax advantage. And I like to think about this advantage as broken into two advantages. So the first one being that when you pull your money out in retirement, you don't have to pay any taxes. Let's just say that over 20 or 30 years, you contribute $100,000 into your Roth IRA. And from growth, that $100,000 becomes $400,000. You don't have to pay any taxes on that $300,000 that you made from those investments. The second advantage, and this helps you on your financial journey, is that you don't have to pay any short-term or long-term capital gains. So for example, if you have a stock that pays a 4% dividend, or you have a stock that grew 10% this year, you don't have to pay any taxes on that 4% dividend. Or if you decide to sell that stock that grew 10% this year and buy another stock, you don't have to pay any taxes on that transaction. This advantage was so crucial for me because it actually made me rethink a decision I recently made. Let me explain. So as you may know, the stock market has been pretty bumpy this year compared to other years. We've seen the S&P 500, which is an index fund that invests in the 500 largest US companies, drop as much as 35% early in the year. And then it bounced back 40% in just a few months. This volatility has actually sparked a lot of new investors to jump into the market. And I'll admit, I was one of them. Prior to the crash, I mostly invested in my 401k and real estate. But this opportunity seemed too juicy and I jumped in. Crazy enough, and with some dumb luck, I was able to purchase many safe and reliable companies at a discount just before the CARES Act was signed in March, including Apple, Boeing, Starbucks, and a few others. Overall, my newly created stock portfolio generated me about $10,000 in just a few months. And while this is great, it could have been even better. Because you see, I purchased these stocks in a normal brokerage account, which you can think of as another investment vehicle, but with no tax advantages. So now I'm gonna have to pay about $3,000 to $4,000 in taxes on those gains. Whereas if I would have put about $6,000 of that into a Roth IRA, or actually $12,000 with the help of my wife, I could have paid about half of that much money in taxes. And I know, hindsight's 2020, but after I realized this, my wife and I did move $12,000 of our gains into a Roth IRA. We had to pay taxes on this money, but it's better to do it now than later when the account continues to grow. So the second advantage is the Roth IRA emergency fund hack. Now I think this is actually really incredible because you're able to use your Roth IRA as a retirement account and as an emergency fund. You might have heard of an emergency fund or a rainy day fund. It's something that most financial advisors, including the financial guru Dave Ramsey, would recommend that you establish before you start investing or aggressively paying off debt. This fund is basically like it sounds. It's money set aside for an emergency or rainy days. This could be an unfortunate event like losing your job or getting in a car accident. For most people, a fully funded emergency fund is about 3 to 6 months of total expenses. But a start to an emergency fund could be as little as $1,000 to cover those one-off expenses that would otherwise have you reaching for money in places you shouldn't. So, the way the Roth IRA emergency fund hack works is based on the fact that you can pull out the contributions you put into the Roth IRA anytime, tax-free and penalty-free. Like I mentioned earlier, you won't be able to pull out any of the gains until you're 59 and a half years old, but let's go over an example to show you why this is so valuable. Just imagine you're working the current job you are right now. Your total monthly expenses are about $2,000, and you want to invest about $500 towards retirement, but you know that you should start building an emergency fund first. Now, you could take this in two directions. You could put the money into a savings account and earn about 0.2 to 1% interest each year, but keep in mind that you will have to pay taxes on that gain. Or you could put that money into a Roth IRA, and then within your Roth IRA, you could put it into a really safe index fund, say something that mirrors the S&P 500, which has produced on average an 8% return over the last 50 years. With either strategy, you'd be contributing $500 per month, which means it would take you 2 years to contribute a total of $12,000, which would give you a 6-month emergency fund. And after those 2 years, with the savings account strategy, and assuming you're getting a great interest rate like 1%, you would earn about $115. But like I said, those earnings could be taxed. Whereas with the Roth IRA strategy, after those 2 years, you could earn about $965 tax-free. So even in this short amount of time, you can see how this hack could be beneficial. But let's take this a step further. Let's say that after the 2 years, you don't contribute any more money into these accounts, and you just left that money in there for rainy days for the next 30 years. After those 30 years, your savings account would be worth about $16,350. Whereas if you went with the Roth IRA strategy, that account would be worth about $130,000, so significantly more money. And when you factor in inflation, you really won't be able to do much with that $16,000 in retirement. One argument against this strategy is that the stock market is riskier than a savings account. We've already seen evidence from this year alone. Like I mentioned earlier, the S&P 500 dropped about 35% at its lowest, and that might have been when you really needed the money. For that reason, and because you really don't want to pull money out of your Roth IRA for small emergencies here and there, it's a good idea to use the Roth IRA emergency fund hack in conjunction with a savings account. Maybe have $1,000 or $2,000 in that account. Keep in mind though, what we've learned from the stock market over the last 100 years is that every time we've seen a crash, we've eventually seen the market recover and continue to grow. The third reason is the ability to hedge your tax strategy for retirement. Now, I wouldn't say that this is as strong as the first two reasons I went over, or that I would invest in a Roth IRA just because of this reason, but it's definitely an added perk, and it's gonna help you be prepared for whatever happens in retirement. This goes back to when I was saying that people told me to invest in a Roth IRA if I thought my taxes were gonna be higher in retirement than they are right now. I will say that this is where I got confused first when I was looking into Roth IRAs. Why would my taxes be higher in retirement than they are right now? I don't know about you, but I'm not planning on working much when I retire. So I would anticipate that I'm gonna make less money than I am right now, and I should be in a lower tax bracket. The argument against being in a lower tax bracket during retirement is that we may still be earning taxable income in retirement. This could be from investments, Social Security, and many other avenues. Also, no one knows what taxes are gonna be like in 30 or 40 years. When we look through history, we actually pay less taxes today than many of the generations before us. And things like the current economic recession cause huge amounts of debt to build up, and that may cause increased taxes in the future. But if you pair a Roth IRA with a tax-deferred account like a traditional 401k, then this will help you diversify your tax strategy in retirement and you'll be prepared for whatever happens. Okay, so after all that, you might be saying to yourself, wow, I can build money in a retirement account and it'll never be taxed? Or, ooh, I did buy stocks when the market crashed in March and I didn't realize there was a way to avoid paying taxes on those gains when the market recovered. Or lastly, I do have my emergency fund in a savings account and that account is growing with less than a 1% interest rate. If any of these sound like you, and I can honestly say I was saying all three of these things not too long ago, or if you just want to start saving more money and building wealth, then it might be a good time to open up a Roth IRA. If you want to get started today, you can go on one of the many discount brokerage firms online. The ones that have fairly low fees include Vanguard, Fidelity, Charles Schwab. If you're kind of deciding between ones that have similar fees, I think it's also important to think about convenience. If you have a 401k or other investments with one of these brokerage firms, then you could go with that one, and that way all of your assets are in one platform. Well, that's it for today. I really appreciate everyone that watched the video all the way through. If you enjoyed this video, please go ahead and hit that like button and subscribe to my channel. I'll be posting here regularly, about once a week. I also want to hear from you guys, so please leave a comment below. Let me know what you thought about the 3 advantages I talked about in this video. And if you're already investing in a Roth IRA, let me know what you like about the Roth IRA and what you don't like about the Roth IRA. I really hope we can get an open forum going and help each other out. So please comment below, and I'll see you guys next time.